What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. So starting Saturday is when I'm going to be very active on this YouTube channel. I'm just doing orientation at my previous hospital I worked at, still travel nursing. I start that in February. So I'm like doing a PRN thing. One, this is going to help build up my dividend portfolio. Two, doing this is also going to help pay off student loans. So kind of that's my focus a little bit. So I want to go over my first high yield business development company that I bought for my M1 Finance dividend portfolio. I'm very excited to transition it from E-Trade to M1 Finance. I'm going to go over a few reasons why I love it. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. Smash that like button. Let's check out this business development company right now. Oh, the market went down a little bit. So I'm at 89,000. Again, my goal is to get to $100,000 for my M1 Finance dividend portfolio. That's going to happen this year, and I cannot wait to celebrate with you guys. When we get to 100,000, this has been an incredible journey. This is only going to get bigger. This is only going to get more powerful. And that dividend firepower is going to fly soon, especially with the YieldMax ETFs announcement. Hopefully it'll be a good one because I'll be able to use that passive income to turbocharge my dividend portfolio and go from there. So here is the journey starting day one. This is my first buy, which I did on the 2nd. And I'm very excited to reveal to you my buy. And I said I would buy it, and I definitely am back at it with Oaktree Specialty Lending Corp. So I have 19 shares right now, 19.46 shares. So I'm going to go over a few reasons as to why I'm buying them. Let's check that out. And so for a business development company, it has not done too bad against the S&P 500 in the past 5 years. Now, again, business development companies, financial sector stocks, REITs, they have struggled against the S&P 500. So this is why I'm capitalizing. You're sitting at 2047. So they have a PE ratio of 12.58. The average volume is 764.75K. The market cap is 1.58 billion US dollars. Tier range is 1770 to 2148. Day range is 2024 to 2058. Previous close is 2040. So let's go over them as a company, and I'm going to provide my rationales as to why I'm buying them. Okay, so going on their website, and I know some people are like, well, why are you going on the website? I'm providing my rationales as to why I'm buying dividend stocks. So I'm going to do a brief review and provide rationales as to why I have interest in them. So Oaktree Specialty Lending is grounded in Oaktree's unifying investment philosophy, placing primary emphasis on risk control and consistency. Their investment objective is to generate current income and capital appreciation by providing companies with flexible and innovative financing solutions. We emphasize an opportunistic, value-oriented, and risk-controlled approach to investing in both private and syndicated transactions sourced directly from borrowers via public markets. Oaktree Specialty Lending is managed by Oaktree Capital Management, a leading global investment manager focused on less efficient markets and alternative investments. So let's go a little bit more into detail. So right here, 2.9 billion investments at fair value, 143 companies, 12.7 weighted average yield on debt investments. So first lien, 76%, that's our composition. Second lien, 10%. Unsecured, 2%. Equity, 5%. Joint ventures, 7%. We need to look a little bit more into them. And going over their debt investment interest rate, that's very important. That's floating rate and fixed rate. Floating rate is 86% and fixed rate is 14%. But also, their portfolio by industry. This is very attractive. They're well diversified. Software 16.5%, specialty retail 5.4%, real estate management and development 5.2%, financial services 4.5%, professional services 4.5%, Healthcare healthcare providers and services 4.4%, biotech 4.3, chemicals 3.5, machinery 3.4, healthcare technology 3.3, commercial services and supplies 3.0, pharmaceuticals 2.8, remaining 29 industries 32.6%, and joint ventures 6.6%. So that's great. But again, remember, I want to see revenue trends and I want to see dividend history because revenue trends are very important with the business development company. 90% of what they make go back to investors. So let's look at their revenue trends. And I really try to keep this basic as possible because, there's a lot of metrics. I still look into a lot of advanced metrics. I will tell you in the future if I'm going to do a detailed review on a REIT or business development company or dividend stock as to why I'm buying them. But look at the revenue trends. 2014, this is annually in millions US dollars. 293, 2015, 265, 2016, 247, 2017, 177, 2018, 138. Wait, what's going on? And then 2019, 147, then 2020, 143, then 2021, 209, 2022, 262, and 2023, 379. So looking at the trends from 2018 to 2013, again, 2018, 138, 72, and then 2023, 379. So that brings my interest into them because if they're generating revenue, 90% of what they make have to go back to investors. That's a rule of the business development company. You can correct me if I'm wrong in the comment section. Same thing with the real estate investment trust. This is why I like ART. This is why I like Saratoga Investment Corp. The trends are beautiful. So we're going to jump to the dividend history. And earlier, I went over the revenue trends. It started to make a comeback after 2018. So the dividend, its quarterly dividend was at 9 cents. And then 2018, it was stuck at 10 cents. So that makes sense. And then 2018, 2019, 2020, pandemic. That's another issue. And then it hit 11 cents. And then 2021, 12 cents. To 13 cents to 15 cents to 16 cents. And then 2022, 16 cents to 17 cents. And then we got a little special dividend at 96 cents. So it cracked to 55 cents right here in 2023 to 62 cents. So it has a pretty good dividend growth. Again, the dividend growth is 19.67% in 5 years. If you bought one share, you made $220 with a 10.78% dividend yield. You're going to see normally a high payout ratio. Again, business development company, 90% of what they make go back to investors. The number of dividend increases in the last 5 years is 11. So I'm going to just be clear. The high yield dividend stocks have very slow dividend growth, or they can be stagnant. But again, the low yield, high dividend growth stocks, I'm going to emphasize this all the time, always win the long run. That's what I want to buy. Okay, I want to make, some extra income with these on the side and stuff, but at the same time, I want to generate passive income. Okay, this will be good passive income for me, not only to reinvest, but to flip that in the future and earn that passive income to build my dividend portfolio and create my own retirement pension. So this is why I buy these. This is why I have a diversification of high yield, low dividend growth, or high yield dividend stocks. There's always a risk with high yielders, so just be aware of that with the dividend cut or terrible dividend growth. So you need to do your due diligence and research with those. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. What do you think of Oaktree Specialty Lending? Let me know in the comments section. I'm going to jump to my disclaimer. Take care. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. I am being very transparent with my dividend investing journey. I am not a financial advisor. It is best to seek financial advice from somebody that is certified to give financial advice or is a financial advisor. So again, when you make an investment, there's always a risk of anything. Okay? There's a risk of losing money or gaining money. So, well, I wouldn't say a risk of there's just a huge risk. So you can lose money. So you have to do your due diligence and research before you make a purchase on a stock because you can lose money in stocks, ETFs, cryptocurrency, anything.